listen, you owe me money, and you're gonna give me my money.
New management, who this?
Who dis? This is your f***ing creditor.
Dollar bond or yuan bonds?
Dollar.
Yeah, that's right. I'm a receptionist at Levergrande on the side. So what? Answering those incoming calls gives me invaluable market color. So, Levergrande finally defaulted. And by finally defaulted, I mean defaulted months ago, if default is still defined as failure to make payment on outstanding obligations in full and on time, and not with some arbitrary grace period. Is anyone surprised that the world's most indebted property developer defaulted? Of course not. I mean, nobody would be surprised that the world's most indebted insert the blank defaulted. And when you have Levergrande bonds massively selling off since July and now trading at 20 cents on the dollar, and its stock is down 90% on the year, I think it's safe to say that the market wasn't exactly shocked or caught off guard. And it's not just Levergrande, it's the whole property sector. Kaisa defaulted on $400 million the same week and halted for trading again. And note that Kaisa also defaulted once before in 2015. So there is some sort of precedence for this in a way. And then you also have smaller peer developers like Sunshine 100 defaulted on $180 million on the Sunday leading into default week. So in recent months, there have been at least 10 corporate defaults out of China. Chinese junk bonds are now yielding at around 23%, which basically makes it impossible for them to keep rolling debt. And then due in the next 12 months, we have the ballpark somewhere about 30 billion of onshore, 40 billion of offshore debt due out of China. So the question should actually be why aren't the stocks and bonds of these things like Levergrande trading at zero? Isn't 20 cents on the dollar 20 cents too much? And how is the equity worth anything? Well, the reason is because it's not game over for Levergrande and friends. In fact, it's game start. None of this so far was the game. This is all preseason. Now it's game time. Okay, so what do I mean by that? So in a moment, I'll get to what exactly it is that I mean when I say that now is when the real fundamental activity, that drives trillions of dollars in and out of China starts. But this is also why I haven't made a real video on Levergrande until now, because until now it's largely been what markets have been signaling for months. It's the massive repricing of securities based on, a more or less sudden change in perceived risk. I did make an Evergrande related video a few weeks ago, but that was more so the calling out of clowns, which is an important lesson that you should watch if you haven't seen it yet. So this is part one of 2-part videos, like a series, if you will. It's 2 parts, it's not really a series. On Levergrande and the property sector and the broader markets in China. And how I'm approaching and analyzing the situation, which is not a narrowly focused financial markets angle only, because this is not a narrow financial markets matter. This is a massive domestic socioeconomic and political crisis management matter. So part 2 will be, basically kind of a look back over the past 2 decades or so, covering a brief history of how China's debt-fueled property market gave rise to the Levergrandes and the rise to China as a whole, and as well as the policy framework over the recent past that has been driving all of this from the beginning, and what I'm basically looking at going forward. But in this part 1 video, I need to establish a few core foundational points. Now, although I haven't made a video per se on my viewpoint of Levergrande and the overall Chinese regulatory crackdown matter, I did present my core framework on Levergrande, the markets, and China as a whole on the Real Vision Daily Briefing back in September 13th. And, which was a differentiated approach from what was being discussed and focused on by the broader public. So here's what I said at the time. So, I have a sort of out-of-the-box conspiracy theory in which, so this broader, Chinese, crackdown that's happening, the regulatory crackdown, I think that it's possible that China Evergrande is very much tied to that. In fact, I believe that China Evergrande might be the driver of that. So this started supposedly with a Jack Ma speech a year ago. One Jack Ma speech did not turn into no more video games, right? It didn't snowball that way. So what I think is happening is that Xi Jinping, why is he so pressing so hard on why is he going industry after industry and relentlessly just bringing the hammer down on the tech sector, on the education sector, on whatever it may be. And what I think he's doing is that he knows that sometime in the near future he's going to have to bail out Evergrande. And when you bail out the Evergrandes, and when you do stuff like that, you basically have a Lehman or an AIG moment, which is what this would be. That's when pitchforks come out. And this is something that Xi Jinping cannot have. You cannot have unrest. You cannot have populism boil up. You cannot have 1.3 billion overworked and underpaid, Chinese citizens all of a sudden get this sentiment of let's burn the house down, which is what Brexit was, which is what Trump was, which is what happens anywhere. It's not a socialist thing. It's not a capitalist thing. It's a small group of privileged people who get government bailouts and handouts at the expense of the masses. That pisses people off. And so what he's trying to do, I think, is that he's trying to hammer down, he's trying to flatten out the wealth, close the inequality gap. And he's doing that to hedge himself, to front run populism so he can be a populist leader, so that when he has to do this big, disgusting bailout of what was once the richest person in China, the CEO of Evergrande, when that happens and Evergrande's stock pops 20% on that kind of news, and foreign emerging market credit hedge funds get wealthier, he won't have pitchforks coming after him. So I think that this is the broader thing. And if you look at the chart of Tencent versus Evergrande, they kind of are moving in inverse. This is another reason that I can't go long Chinese equities, because obviously if Evergrande goes, if it becomes worthless, then that's going to crash the entire financial system in China, and then some probably. But if good things happen to Evergrande, as in government rescue comes through, then Evergrande stock is gonna pop, and the bonds are gonna pop as well. And when Evergrande securities go up, that's gonna piss off a lot of people in China. And so therefore, you're gonna see every time something good happens to Evergrande, something is going to come out of left field again and smash down the tech sector or the whatever sector. Some other rule is gonna come out. And I've been paying attention, and it's actually been happening in that kind of succession. So if you want to get any rhyme or reason for what's kind of going on, try paying attention from that angle. That's my theory.
That's so interesting. So, Weston, what you're saying is that if Evergrande is going to have sort of an AIG type bailout, Xi Jinping wants to forestall and occupy Wall Street by being very harsh onto Chinese tech companies, which are owned by typically very wealthy people.
Exactly. Imagine you had a $180 billion bailout of AIG, and then Hank Paulson, former CEO of Goldman, then Secretary of Treasury, smashed Goldman down, stock down. That might have alleviated some people, but so I think that's what he's learned. He sees it everywhere. Again, this is not a communist or a socialist or a capitalist systematic thing. It's a people who are feeling like they are getting left behind, while a small minority of powerful and rich people continue to have, very nice lives at their expense. And when you have nothing to lose, when you feel like you have nothing to lose, you're going to want to burn down the system. It happens everywhere, right? So Xi Jinping cannot have populism in that country, and so this is what he's doing. And it's certainly not from a Jack Ma speech, that kicked off this whole thing. That's not what this is ongoing, and this is so China Evergrande will get bailed out. The more it gets rescued, the worse they will have to come down on, just for the optics. Okay, so there you have it. Another one of my nutty conspiracy theories, but that's been my basic framework and what I'll be expanding upon. So just to reiterate my view and my core point, the property market in China is indeed too big to fail. Now, just because it's too big to fail doesn't mean that it will not fail. Nor does too big to fail even mean Therefore, government will take decisive measures to prevent failure. It also puts into question what failure even means. Your definition or my definition of failure is not relevant. The definition of success or failures is dependent on how those who have the ability to move the chess pieces define it. That's not us. But with that said, Levergrande and the property market in China is too big to fail. So when push comes to shove, the government will do everything that it has to make sure that the property market does not completely collapse. Because if it does collapse, it will cause social unrest on steroids, like far more than a government rescue-driven populism movement. So the central government cannot let that happen. In fact, you could say that with regards to the other markets, namely fixed income and equities, it's like, fine, implode if you must. It's not preferable, but it's not quite like end of the world bad as if the property market were to collapse. And why? Why is that? Because property is the asset that domestically transformed China into the economic giant that it has become over the last decade or two. And the central government is the determining body which created and managed this structure all along, and is currently managing or mismanaging this structure all along. Property has driven China's internal, socioeconomic landscape, right? Everybody has a stake in it. Ownership of property amongst the public in China is well over 90%. Okay, you compare that to 9% for equity ownership. So which do you think the government cares more about? Where Alibaba, Tencent, Meituan, Didi, and the like are trading, or the integrity of the social fabric of China via the property sector? And property isn't just some kind of long-term buy and hold like retirement vehicle either, right? Like there are generations of life savings and net worth from lifetimes of extremely hard work locked into like property ownership and counting on housing prices to continuously rise, or at least to not plummet. Over 3/4 of household wealth is directly tied to housing. And it's not just the household balance sheet that's at stake, critical as that is. It goes far beyond that. The selling and leasing of land to property developers is the primary revenue stream for provincial and local governments. Okay, and then you might have heard of LGFVs, local government financing vehicles. Property is a lifeline for these highly indebted LGFVs, for which the amount of local government debt outstanding is half the size of China's GDP. So there's that whole angle. Then there's the banking sector, highly, highly intertwined and exposed, or dependent on, continuous rise in activity in the property market. Property and real estate is 1/4 of China's GDP. That's entire subsectors of construction, real estate related businesses, and all of the subsectors within, right? So it's a juggling of like jobs and growth versus debt and risk, and what kind of jobs and growth to be achieved via what means. All of that is what this big balancing act is. Property and housing, isn't just like a critical pillar of the world's second largest economy. And it's not just like this thing that's deeply embedded into culture and society. It is culture and society. It's what's fueled China's rise for this like greatest wealth migration in history. When you hear about like hundreds of millions taken out of abject poverty into middle class, this is what the driver is. So that's why in the world of Chinese financial assets, nothing else compares at all in importance to real estate and property. Nothing comes close. Certainly not the level of where like the Hang Seng Index is trading. But for now, off the bat, we need to establish the proper starting point for which to build this framework. Okay, and this is a very critical step one that's somehow completely missing amongst like the vast majority of like all these Levergrande commentary and analysis that you see going on everywhere as of late. So once again, here's me again from the same episode of the Daily Briefing back in September. But this is the very first thing that I say before anything else.
First of all, I think that indeed Chinese equities are uninvestable. This is a very just basic premise, is that if you want to buy the dip in China, that's fine. You could, knock yourself out. You can do that. But you have to understand something, which is that you are not investing in capitalism. So if you're looking at if you're saying Chinese equities are cheap, and you're comparing let's say valuations, forward PE or whatever it is, with U.S. tech stocks or something like that, they're two completely different playing fields. I guess you can use those sort of metrics, but you're misapplying them to a totally alien sort of market and economics and social fabric and system. So that's why I can't, bring myself to buy any sort of dip.
Okay, so let me just repeat that point. China is not a capitalist system of markets, of economics, of government, of society. So to apply Western capitalist, assumptions and modeling and frameworks and strategies to a non-capitalist system is it's insane. It's insanely wrong as a starting point, right? Let's first figure out what sport we're playing, right? Before we start drawing up, the playbook and what plays to run and what strategies and this and that or whatever. Let's first figure out what field we're on. If we're even on a field. Are we on a field? Are we on a court? Are we on an ice skating rink? Right? Because if I bring ice skates to a tennis court, that's not going to work. And this is not some secret either. This is very openly it's called the Chinese Communist Party. This is well flagged, we'll put it that way. So when you're invested in China, or if you are invested in China, and by all means do so, but understand that you are not invested in capitalism. So as long as you understand that, go knock yourself out. Because if you get that first step wrong, anything thereafter is going to be wrong. Because you are fundamentally flawed from the start. So back to the, Levergrande bonds trading 20 cents on the dollar. Why is it trading on any cents on the dollar? What that remaining long capital represents has little to nothing to do with a bet on Levergrande itself, Levergrande management or business prospects or whatever. This is a bet on government actions, and not just will government take action, but will they succeed in taking action? So will Chinese officials and regulators and the PBOC allow for Levergrande and friends to die a messy death or not? Whether or not that bet works out, it's at least the correct understanding of what the bet is, long or short. Okay, and then now that we're officially in default, the keys have now been handed over to the authorities. And so what happens from now is why this is the opening day of the regular season, or the beginning of the regular season. Because the regular season is not a system of free market capitalism. It is a system in which the market participants, if you will, are the top-down officials, regulators, and central bank, and so on and so forth. This is when real management is stepping up to the plate. So about a week after I was on the Daily Briefing, mid-September, an interview came out on Real Vision with Raoul and this guy James Aitken, who I think is fantastic. Raoul calls him the expert's expert. He really knows his stuff. But just take a look at this clip that came, about a week after I had laid out my view.
And the narrative that Western capitalists, aided and abetted by Ray Dalio, for example, were imposing on Xi Jinping's capital markets crackdown is no. He needs foreign capital. He will never hurt us. And they completely misread it. And it's no surprise that some of the biggest sellers of these Chinese mega cap tech companies have been Western capitalists who misunderstood. So fair play to them. They realised they were wrong. They chopped out. But now people are coming back and saying, oh, geez, Baba, Tencent, all these JDs, Meituan, whatever, these looking quite cheap. It's like, you have no idea. You have no idea. The idea that the guy running the show gives a fig about your NAV and your exposure to any of these companies when he is trying to assert and underpin the Communist Party of China's control over the whole show.
We've seen this playbook. It's called Russia. Putin did exactly the same thing. All the Westerners had to get out of these stocks, and they've traded cheap forever. They're cyclical. You can make money in them, but you can't be an owner.
I want to be very clear. These are great, great, great businesses. There's no doubt about it. I mean, talk about a moat, talk about a flywheel. A billion consumers can't be wrong, right? And that's before you factor in the rest of the planet. Great businesses. But if Xi Jinping is just on the front edge of a 3-year capital markets crackdown, and those are his own words, we've had 3 months of it.
What does he mean by capital markets crackdown? Sorry.
Well, common prosperity, right? You people have got too rich too quickly would be a very quick and dirty executive summary. You need to pay your respects to the Communist Party of China because you owe us everything. Oh, and by the way, it'd be quite helpful if you coughed up and donated to this concept of common prosperity, which is what these companies are all doing, particularly Tencent. They can afford to, but will it be an ongoing tithe or something like that? We don't know. So is the market clearing multiple of these gigantic, extraordinary Chinese technology companies, is it ever going to go back to where it was? Or is it now going to trade, and perhaps your Russian analogy is a good one, or are they now going to trade at a much lower multiple for the next 2 to 3 years while people trade around earnings wiggles and everything else? But the reason, I keep saying breathtaking because so much about what's happening in China is breathtaking, an ongoing deleveraging campaign, including taking down not only one of the most indebted borrowers in China, probably the biggest.
Damn right, James Aiken. I don't think that Xi Jinping gives a fig either about your NAV. Not you, James Aiken. I mean, people's foreign investors, NAV, net asset value, their portfolio. Now, very ironically and kind of hilariously, it happens to be that, especially in this case, China is more of a free market system in terms of what they say or the behavior than Western capitalist, so-called capitalist systems are, right? Like, they're very, at the moment, trying to be hands-off, anti-moral hazard. This is a markets problem and requires a markets-based solution and so on and so forth. It's completely a flipped script where, as opposed to the West, which is currently going through a period of removing accommodative policies, socialist policies, if you will, and having trouble doing it. Like how much effort is the Fed putting into just trying to get rates off of zero or trying to taper their very intrusive bond buying, and how difficult that is to do. I just find that flipped dynamic to be kind of ironically hilarious. We've established who's in charge and what the sort of rule of law model is. We can now try to look at where their priorities lie, what they care about. Right? It doesn't matter what we care about, where our priorities is. It matters what they, prioritize. Evergrande is going to go through a restructuring, and there's going to be a whole bunch of different stakeholders at the table of how to, who gets what and when and how much. So it's worth it to look at some of these stakeholders. Levergrande owes $100 billion to its suppliers. That includes construction, materials, furniture, as well as services like cleaning, maintenance, right? These are, businesses that have already provided goods and services to Levergrande with accounts receivables pending that they haven't gotten paid. And these suppliers also have suppliers, and they have employees and all that, and they are not just pissed off, they are scrambling around to, figure out how to stay in business. Like, if Evergrande is a client, that's a huge client. You likely don't have many others, and so they're taking massive hits because they're not getting paid. So that's a major constituency at the table. Evergrande also owes about 1.5 million apartments worth 1.2 trillion RMB to households that they've already paid, cash in down payments, like starting at like 50,000 USD and up. And all they have to show for it is half-done apartment that is kind of frozen in limbo or not even started at all. Evergrande has 125,000 employees, and more on them in a moment. And then there's the wealth management customers, okay? And the billions of dollars that are owed to them. Now, first and foremost, wealth management is not what it sounds like. It's not like UBS high net worth, wealth management clients. And so. Wealth management is just retail investors. Some of them are very elderly with their savings, their life savings, of $20,000 that bought these wealth management products from Evergrande, and that all of a sudden don't have their principal anymore. Also, among these wealth management customers, both Evergrande employees and Evergrande apartment buyers. Like the apartment customers, they were basically sold these wealth management products because they were advertised in the elevators of their buildings, and they have financial advisor of these wealth management products sitting in their lobbies, and they were basically sold these products advertised as conservative steady fixed income investments for an 11% yield, because that's a common thing, right? And these apartment customers invested because they obviously trusted Evergrande enough to live in their buildings. People knew them as a global Fortune 500 company. And the employees who were wealth management customers, this is an entirely different situation. So there's many reports out of Reuters, out of New York Times, about how Evergrande management told their employees to either invest or lend them money, or they will lose their bonuses and compensation. So, if that's the case, that's a no-brainer, right? Either not get paid your bonus, or get paid your bonus and also invest with an so-called 11% yield. They don't have their principal. This is not they're not saying where's my 11% yield? This is not about greed. This is, we gave you our principal. Where is my fucking money? It's kind of like that phone call I took, as a receptionist earlier. And then there's about 250 banks and financial institutions that lent the money. And then comes the bondholders and shareholders. The yuan bondholders and the USD bondholders. And the shareholders. And by the way, shareholders, the chairman and founder of Evergrande owns an 80% stake in the company. So it's basically just him. And now Beijing decides who gets paid in this capital structure. So who do you think Xi Jinping cares about? It's not like he's trying to screw over the USD bondholders. It's just that they are so unimportant relative to all of these other parties. The wealth management customers, the apartment buyers, all of them, they need to be made whole. 100 cents on the dollar. And quickly. Xi Jinping does not care about some institutional investor in Greenwich, Connecticut. No offense, Greenwich, but he doesn't care. So this restructuring is now where the game is. The Guangdong provincial government's now involved. All these stakeholders, have a seat at the table. And you have the hiring of Houlihan Lokey, which is a firm that's famous for, getting hired for the Lehman bankruptcy. I think maybe even Enron as well. Basically, they are the Johnny Cochran of financial institutions. I mean, if you hire them, you're admitting a lot just by hiring them. So think about all those stakeholders, and then think about foreign creditors in the framework of Xi Jinping's common prosperity.
But the challenge for investors is to assume, I think arrogantly, oh, I know what this guy's doing, he'll never hurt us. Well, I think that's a big call, because Xi Jinping has reminded every foreign investor in the biggest Chinese companies, that he is super senior in the capital structure, right? Everyone
Nice
is
way of putting it.
subordinate to him. Well, of course, he's the president of China, right? He's running the show. He's the big dog, right? Of course he is.
And why he's doing all this, and that homes are for living in, not for speculation. That's what
You say that's what she said one more time, I'm gonna pop you.
Okay, so that's basically it for part one. Just going over my core view and how I'm approaching it, how I'm looking at this, how I'm analyzing it. In part two, I will go more in depth into these sort of stakeholders and how we kind of historically got to where we are, and based on that, how I'm kind of analyzing what the central government or the powers that be will at least attempt to have this play out. They're kind of stuck between a rock and a hard place. They cannot let it fail. They have to save the system, but they cannot allow for any sort of moral hazard appearances. And so I'll go more into depth in that and how I think it's going to play out going forward. But thanks for watching this one. We'll see you for the next one. Keep a lookout as it's coming shortly. Thanks.